The question among many people's minds is, how is this shutdown going to affect the market? If it goes on for too long, what is going to happen? Why are markets making new all-time highs? Why are they pushing? What is going on over here? Because it seems as though we should be getting the opposite, where the market is not so happy. Why? Because markets do not like uncertainty. Right now, with this government shutdown, the longer it goes, the more the uncertainty builds. So we have a couple of questions that now need to be answered. If it does prolong, what can we expect? Does this back the Fed into a corner? What happens? This week, we're going to try and delve into that, talk about some stocks, talk about the new acronym that's out now called PARC, and see how we can adjust and plan for a prolonged shutdown. So the first thing that needs to be addressed is what happens if the administration starts to Doge 2.0. That sort of backs the Fed into a corner. Why? Because you'll have a situation where unemployment is ticking up while the effects of tariffs haven't been hit, which would basically, to a large extent, supercharge a stagflation environment where you'll have unemployment spiking, you'll have prices not necessarily backing off, but staying relatively high. Again, in relative terms, inflation staying relatively high, which to a certain extent causes the Fed to be a little bit in a corner. They're backed into a corner because the Fed has to worry about a slowing environment, obviously, because if you have unemployment starting to rise, then the Fed uses their tools of interest rate policy in order to keep the economy going. But if they're cutting rates while they're waiting for tariff effects to come in and for prices to potentially spike, you now find yourself in a stagflation environment that's been supercharged. Therefore, this could create a lot of problems for the Fed moving forward. There are some who are going to say that if unemployment starts to pick up, which we won't see it necessarily at NFP, it'll be on the weekly jobless numbers. That's where we'll see it in the jobless claim numbers. We'll start to see the effects if Doge 2.0 goes into effect, where once those jobs are gone, they're gone, and you could have a prolonged period of unemployment, which therefore would have the Fed, by mandate, need to start cutting, potentially cutting aggressively. We don't believe they're going to do that. We believe that the fear of tariffs and the fear of higher prices and higher inflation potentially coming back may subdue the cuts, or at least the pace and the velocity of them. However, for right now, the market is pretty much ignoring it. Now, we do believe, and markets have a tendency of doing this, if this shutdown continues and it stays more prolonged, then the market will wake up and start saying, hey, this is no good. And they'll start selling this sucker off in order to send a message that we don't like the uncertainty. We want things back to somewhat a normal place. And if you don't give us what we want, we're going to sell the market off. Why would they sell the market off? The perception is that if the stock market is doing well, the economy is doing well. Granted, the economy and the stock market are not one and the same. The economy is one thing, the stock market is another thing. But in order to shake the tree, the markets may pull in, and you could see a move down in the S&P down to about, or even 6,500, even lower, if this shutdown continues for a prolonged period. So with that being said, right now S&P is looking good. Granted, we did have a little bit of a weird Friday where we, to a large extent, at least in the futures, kissed 6,800. The cash got to 6,750, so we didn't get totally to 6,800. We did make a new all-time high. Granted, we did back off. This is a little bit of a 80-20 to a certain extent. Market is looking fine. It's not so extended yet from the 8-day or the 21. It is riding it up, so the trend is nice. The trend is fine. However, just keep in mind that we could start seeing a potential 1-2% move just because the market wants to send a message to Washington. So that's the S&P. Let's look at tech. NDX, same thing. The only difference with the NDX versus the S&P is that the NDX did take out the prior day's highs. It did take out Thursday's highs. It came back into Wednesday's range. It's still holding above the 8-day. It's a little bit more suspect just because of the way that it was in an almost It wasn't a fully engulfing day on Friday, so there might be a little bit more room to the downside. Tech may lead us lower just because, again, the longer this shutdown goes, the longer the uncertainty is out there. Markets might want to send a message to DC. We don't like this. Let's wrap this up. So look at the Russell quickly. Russell, same kind of situation. We did get to the breakout point, which is about here. We did get to it. However, with that being said, we did have a weird sort of bar day on Friday. Russell did break out from these November 24 highs. Right now, as the old adage says, support becomes resistance, resistance becomes support. We did close right around it. We'll have to see how the Russell continues. We may pull in because you could say it's a little bit of a quasi double top. It's not really a double top because not enough, at least in our opinion, not enough time went by. But we would keep the Russell up as a way to just measure risk on, risk off. The Russell was leading sometime. On the upside, it could lead us on the downside. Let's look quickly at semis, and then we'll get into some individual names. Semis, this was an engulfing day. I would be very careful here now. They're a little extended. We'll go into a couple of the names just to see what they look like. But semis are definitely not looking healthy, at least on an intraday basis. In the context of the trend, they look fine. You could be setting up for an island reversal. So Monday, if we have a gap down, then you have your typical island reversal, and then semis will probably lead us lower. Let's get into some of the individual names. Oh, let's just look quickly at the NYSE FAANG. NYSE FAANG is not looking as great as the NDX and the S&P, or even the Russell for that matter. This is a little bit of a problem. You want to see it get above this area, which is about 16, let's just say 16,300. We're definitely smashing our head into it. So 16.3 is really where you want to see the NYSE FAANG get above. Obviously on the downside, we're kind of in like this little bit of a box area where let's just say 15,930 on the downside, 16.3 on the upside. It's a big range, but really we're consolidating in here now. So we could just be chopping around till earnings. Earnings are coming up in a couple of weeks. Granted, it is a few weeks away. The season is coming. So we might get some consolidation and some choppiness going into it. Now let's get into some of the names, and then we'll go with the park, and then we'll wrap it up. Apple right now is looking fine. It finally is rewarding people for being in it. It was this choppy sloppiness going on over here in the beginning of the year. Finally woke up. It's not a barn burner, but it's a place you can be. Apple actually looks better than Microsoft right now. Microsoft is just chopping on. It might take earnings to get this thing going. It's pretty much consolidating. I would watch it. Anything above 520.22, and that pretty much should send it. 522 on the upside. You look at about 505 on the downside. If the 50 doesn't hold, and then after that, 505 would be stop one, and then obviously this low over here. At around 490 would be your next stop, and then after that would obviously be the 200. We think a lot of things would need to go wrong for us to get to the 200. We think that the market probably will just consolidate between 20 and 505, and then wait either till the shutdown is over or earnings. Amazon, nothing special right now. There's nothing really to talk about here. It's somewhat bent. It's not broken, but it's somewhat bent. Really, the stock that's been driving everything has been Google. Granted, it took a couple of days off, but Google by far and away is probably the best stock in the market right now, by far. You'd want to see a move somewhat above Thursday's highs for a continuation. That's what you'd be looking to do. But Google has definitely been the stock that's driven the market more than pretty much anything. I would say Google and NVIDIA, but Google really has been holding us up. Meta, bent, not broken, but bent. It's not looking so healthy. If these Tuesday, Friday highs don't hold, then you got to get out of Dodge. That's pretty much your line in the sand right now. Let's say this 708, 705 area, we break this, then that opens the door to the 200. As weird as that is to say. You could say you have this stop, you have stop one around 60, 690, but the odds favor that we're probably going to kiss the 200 if we take out these Tuesday, Friday bottom. Okay, let's look quickly at Netflix. Netflix has been in the news. Elon Musk has been going after them a little bit. You can Google that to figure out what's going on. That's what's caused the stock to move the way it's been moving. There was a spike in Google traffic on searches for how to cancel a Netflix subscription. So Netflix, which was once special, is now suspect. We don't believe that this Thursday low is going to hold. We think that this Thursday low of 1134 is not going to hold, and we believe the stock is going to get down to around the 200, which is about 1092, 1095. We think that's where it's going. Okay, let's look quickly at ServiceNow. ServiceNow is really I wouldn't even waste too much time here. It's a sloppy, choppy mess. It's not really doing much. It's wicking all over the place. This is just not something I would even waste time in. Move on from that. CrowdStrike. CrowdStrike holding where it needs to, this 485-ish area holding. Again, it's contained in like a $15 range. It's not really a barn burner. There's probably better places to be. I'd keep it on the radar for a break of 500. Then obviously 485 is you're out. But it's not really moving. This may need earnings to push it. Right now, it's just not really doing much. Let's look at NVIDIA and Broadcom, and then we'll look at the projects. So NVIDIA looking better than it was. Obviously, you had that clear break. We had that clear break over at this 185-ish area. I would look for a pullback to 185, 185, you could buy it, and probably then you could ride just use the 8-day, and then if it doesn't hold that, then you'd be looking for it. Basically, you're kind of like look for this 180. So if you're getting in at 185, your next spot that you want to see hold would be 180. A break of 180, you got to get out of Dodge. But it's looking fine in that regard. Again, not barn burners. Nothing is really exploding to the upside, but they're looking constructive. Broadcom, it's holding. But I wouldn't get involved with this until a break of Thursday's high on the long side. Other than that, you're kind of getting into this messy aspect. It's holding. You could technically buy it against the Thursday, Friday lows. It's a little tight. You probably will get stopped out. I think the better trade is a break of Thursday's high, because we believe that Friday's high is not going to take too much to get out of. So we think Thursday's high is a better spot to buy against. And then obviously just use Thursday, Friday lows. There's a new acronym that's out now that's called PARC. And in PARC, you have the following stocks. It's Palantir, AppLovin, Robinhood, and Coinbase. We're going to end off with that. So let's just look at those quickly. So Palantir, Friday was a stand up and take notice day. This is an igniting bar to the downside. This is some damage that happened over here. This may want to get to the 50 and test that. You have this gap low, which really isn't even a gap low anymore. We can get rid of this. We're probably going to get to the 50. Now we took out in one day, we took out 1, 2, 3, 4, 5, 6, almost 10 days of price action in one day. So this is definitely a stand up and take notice day. I'd be very careful here. You want to test one would be against Friday's lows. If it's showing some strength on Monday, if Friday's lows don't hold, wait, get out of the way, wait for a test of the 50, and then you can go from there. So that's Palantir. That's AppLovin. Better. You did have the gap fill, so you could technically buy this against Thursday, Friday lows. It's a little bit extended, but if it holds, then why not? We get above Friday's high, buy above Friday's high, use Thursday, Friday lows, and see where it goes from there. If not, it's probably going to pull into the 21. It is very extended, at least from the 21. It's almost to some extent a parabolic. It's not as dramatic. The bars are not as wide and heavy. The trajectory and the slope is definitely more parabolic in nature. Let's look at Hood. This is a chase. I would wait for a pullback. I wouldn't be buying this so quickly. Maybe wait for a move back down to 8-day at around 138-ish. Then it's a better spot. I think over here you're chasing it, so you really got to be careful. Even if you're going to buy it up here and use, there's not really any place that you could use that's safe. I think either which way, you need some kind of constructive retracement to buy this, because up here, otherwise, it's purely a chase. Let's look quickly at Coin. A Coin also, again, this is also looking good. We did fill the gap. Your next spot, if you want to see, if you're going to buy, you could, to buy over here, again, it's also a little bit of a chase. You want to wait for some kind of retracement, consolidation, can retrace, then get above 386, 386-ish. And then that should put us on a trajectory to get back up to 400 area. But again, I think right over here, it's a little bit more of a chase. So you got to be a little bit more careful. That's pretty much what's going on in the market for right now. Things are pretty much in holding patterns. A lot of it is because of the shutdown. So you do have to be aware of it. In a shutdown, we'll just go back to for a second. in a shutdown, if the market decides it wants to shake the tree and send a message to DC, then all bets, all levels are off. The market could go wherever it wants, because if they want to send a message, they'll send the message and it'll be a painful message. So you just have to be aware of it. Obviously, trade the better setups, find the stocks that are moving directionally, that are cleaner, that are offering you the best risk reward. Stay safe, be on your toes, be aware of what's going on in the news, and we'll see you on the next one. Thanks for watching.